All right, today we're going to dive into the ultimate tax workbook, and our goal is simple, to completely change how you think about your money. We're going to take a subject that, let's be honest, can feel super complicated and turn it into a powerful tool for your own financial future. So let's get right into it. Let's just be real for a second. For most of us, when you hear the word taxes, it just brings up this feeling of confusion, maybe even a little dread. You picture piles of forms, all these confusing terms. It can feel totally and completely overwhelming.
But what if we could flip that script? What if we could actually untangle that whole mess and just create a straight path forward? Well, that's exactly what we're about to do. We're going to build a really clear roadmap, step by step, to put you squarely in the driver's seat.
So our journey here, it really starts by reframing this whole idea. This isn't just about getting through tax season. It's about empowerment. And the workbook itself just puts it so perfectly. Knowing how your money is taxed, that is fundamental to planning your finances, maybe growing a business, and really taking control of your financial destiny. This one idea, it's the key to everything. So how do we get there? Well, we start by understanding that taxes aren't random. They're not just made up. They actually follow a very clear, logical formula. Think of it like a simple map that shows you exactly how your tax bill gets calculated. And this slide just illustrates that path perfectly. It's really just a three-step journey. You start with your gross income. That's everything you earned, the big number. Then you subtract some specific things called adjustments to get your adjusted gross income, or AGI. And finally, you subtract deductions to land on your taxable income. And that is the number that actually gets taxed. Okay, abstract formulas are one thing, but seeing it in action, that's what makes it all click. So let's walk through the example of Sarah from the workbook. This will make it crystal clear. All right, step one, we start with Sarah's gross income. So let's say she earned $60,000 in a year. This is our starting point on the map. Easy enough. Now for step two. Sarah made some really smart financial moves. She put $5,000 into her IRA and she paid $2,000 in student loan interest. These are called adjustments, so we subtract them from her gross income, and that brings her AGI down to $53,000. And here's the final step. Sarah takes what's called the standard deduction. It's a fixed dollar amount anyone can subtract. For this example, it's $12,950. That lowers her income one last time to $40,050. See that? That's her final taxable income, the amount she'll actually pay tax on. It's way less than the $60,000 she started with. So we just saw how a deduction lowered Sarah's taxable income. And that brings us to two of the most important tools in your financial toolkit, deductions and credits. I want you to think of these as your financial power-ups. Now, what's so interesting here is the critical difference between these two. Look, deductions are great. They lower the amount of your income that gets taxed. But credits are even better. They are a direct dollar-for-dollar reduction of your final tax bill. So a $1,000 credit saves you a full $1,000. That is a huge deal. And here are some common examples you've probably heard of. Deductions often relate to big life expenses, things like your mortgage interest or charitable donations. Credits, on the other hand, are often designed by the government to encourage certain things like saving for college or supporting a family with the child tax credit. Just knowing which of these apply to you can make a massive difference. All right, let's pivot for a second. For all the entrepreneurs and small business owners watching, we're going to talk about a huge decision that directly impacts your bottom line: choosing your business structure. This table just lays it all out so clearly. You can see the trade-offs, right? A sole proprietorship is super simple, but an LLC gives you that liability protection. An S-Corp lets profits pass through to you personally, while a C-Corp is a whole separate thing that can sometimes lead to double taxation. Choosing the right one isn't just a tax decision, it's a strategic foundation for your business's future. Okay, this brings us to our final and I think maybe the most important section. We've learned the what, and now we need to talk about the when, because true tax mastery isn't a once-a-year scramble in April. And this is the big mindset shift. Tax planning is a year-round activity. It's about making smart decisions every single quarter, not just when the deadline is looming. This could mean timing a large donation, deciding when to sell an investment, or maximizing your retirement contributions all year long to really optimize your financial health. So let's wrap this all up with 5 key takeaways. First, master that core formula.
Income, adjustments, deductions. Got it? Second, if you have a business, be intentional about its structure. Third, always, always keep amazing records. They are your best friend. Fourth, make planning a continuous thing, not a last-minute panic. And finally, hey, don't be afraid to ask for professional help when you need it. It's a smart move. By understanding these principles, you're no longer just a taxpayer. You are the architect of your own financial future. So I'll leave you with this question to think about. Based on everything you've just seen, what is the one single step you're going to take to start mastering your taxes this year? Thanks for watching.